Hi everyone, welcome to Chapter 10. This chapter addresses the measurement and reporting issues involving property, plant, and equipment and intangible assets. These are the long-lived assets that are used by a business in the production of goods and services. For financial reporting purposes, long-lived revenue-producing assets are typically classified in three categories: property, plant, and equipment, natural resources, and intangible assets. Property, plant, and equipment includes land, building, equipment, machinery, furniture, autos, trucks, etc. Natural resources includes such items as oil and gas deposits, timber tracts, and mineral deposits. Intangible assets, unlike property, plant, and equipment and natural resources, do have a lack of physical substance, and the extent and timing of their future benefits are typically highly uncertain. Intangible assets include patents, copyrights, trademarks, franchises, and goodwill. Illustration 10-3 in your textbook provides a description of some assets usually included in property, plant, and equipment, along with the costs that are typically included in their acquisition costs. And the bottom half of this illustration provides a similar description for intangible assets. This is an important illustration and should be flagged for future reference. Okay, let's take a scavenger hunt bonus break. Over some of the Chapter 10 instructor video lectures, you will find scavenger hunt bonus phrases. Write these phrases down as you find them. By the time you finish watching all of the Chapter 10 instructor video lectures, you will see that the phrases form a question. I will award 5 bonus points to the first 25 students who send me a Canvas message stating the entire question and giving me an answer to my question before the due date of exam number 5. The first scavenger hunt bonus phrase is, there are only. A capitalized cost is one that should be recorded as an asset rather than expensed in the current period. Property, plant, and equipment is a broad term that includes, as we've said before, machinery used in manufacturing, computers, other office equipment, vehicles, furniture, etc. The cost of property, plant, and equipment includes the original purchase price plus any sales tax, transportation costs paid by the buyer to transport the asset to the location in which it will be used, expenditures for installation and testing, legal fees to establish title, and all other necessary costs to bring the asset to its condition and location for use. Illustration 10-4 in your textbook shows a good example of costs that should be capitalized into the initial cost of equipment. Central Machine Tools purchased industrial equipment to be used in its manufacturing process. The purchase price was $62,000. Central paid Freight Company $1,000 to transport the equipment to its plant. They paid $300 shipping insurance. In addition, the equipment had to be installed and mounted on a special platform built specifically for that equipment at a cost of $1,200. And after installation, several trial runs were made to ensure proper operation. The cost of these trials, including wasted materials, was $600. all of those expenditures are necessary to bring the equipment to its condition and location for use and should be capitalized into the cost of the equipment. So the company will debit equipment $65,100. Although most costs can be identified easily, others are more difficult to identify. For example, the cost of training personnel to operate the machinery could be considered a cost necessary to make the asset ready for use. However, because it is difficult to measure the amount of training costs associated with a specific asset, are usually not capitalized but are expensed in the period in which incurred. Let's look at a concept check problem. The following expenditures relate to equipment purchased by Symington Corporation. Purchase price of $48,000, transportation costs of $2,400, and that's transportation to Symington's building. Installation and special wiring costs of $1,500, testing $6,000, and cost to repair damage to the equipment that was done while the equipment was being unpacked, $2,000. For what amount will Symington record the purchase of the equipment? Please pause your video, do your calculations, then start the video again to check your work. The correct answer is B. Costs necessary to acquire the asset and bring the asset to its condition and location for use should be capitalized. That would include the purchase price, transportation costs, installation and special wiring, and testing. However, the cost to repair damage done to the equipment while it was being unpacked is not a necessary cost to get the equipment into Symington's building and ready for use. So Symington will capitalize $57,900 into the cost of the equipment and will expense the $2,000 repair cost. Well, that's all for this video. In the next video, we'll discuss the cost of land. See you next time.